The November numbers are out and we hit a new sales low for the year 2022. It is these kind of weird numbers that can easily be manipulated to tell whatever narrative that you actually want it to tell. So this is why I'm going to give you just the numbers as usual and kind of tell you my perspective of what the numbers are, the good, the bad, and the ugly. So make sure you stay tuned. Now, if you are looking for some help on how to prepare for the 2023 real estate market, whether you're a buyer, seller, or investor, this time is actually when most people get started, and that's when you start calling me. So if you want to start your goals per se on January 1st, and let's be real, it's January 2nd, you're already behind. So you can book a call with me using the link that's on the screen. It's right here, www.chatwithzen.com. Simply click on the date and the time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name's Zhen, and I run a RE/MAX brokerage in the Greater Toronto Area, on top of making awesome, educational, plenty of charts and graphs and data information real estate content for you, just like this episode. So let's start off with the ugly. November saw the lowest sales of the 2022 year, like I was saying in the intro, at about like 4,500, which is around like a little bit less than 400 less than July 20, which is a 20-year low, or 7.5% less sales, which is quite a bit. And honestly, without sounding too realtor-y on this, this really isn't that bad, and I'll explain why later on. But when you look at the actual numbers in depth, it really tells a different story. Now, the next ugly stat is that prices are down 7.2% year over year. Whoa, right? Big time drop. But I've warned you before in previous videos, we'll see these massive big year over year drops until like June, July of next year in 2023, assuming prices stabilize, which is a probably best case scenario we see from here on for the GTA market. We'll probably see like a minus 20, minus 25% come February or March sometime next year. And that's probably what I'm expecting. So with all these numbers likely being displayed on headlines, articles, all your clickbait stuff, why am I not concerned? Well, because when you look at the actual months of inventory and the numbers month over month, it's the same, right? Have a look over here. The average prices are down 0.92%, give or take, from last month, which seems like a lot, but not really. It's really not that big. It's a bit of a little bit higher than the 20-year average. I can see I put over here, but it's not that much bigger than it, right? Plus, you can see it's generally going to go from red, meaning prices go down from the month of October to the month of November, and that's because of seasonality, meaning prices should be falling at this time of year, so this is why I suspect it, and I'm not surprised. Now, if you look at this chart over here, which is from the year to date, from January to now, you can see that we just kind of gave back any minor gains we saw from August to October because it inched up tiny little bit. So these price movements are so small, it's basically same. I would say it's flatline, right? We've essentially just reverted back to the same numbers we saw in July, including the sales volume more or less, because it's also that low, right? This is hence why I am honestly not that overly concerned right now. Now, back to the month over month data, as you can see here, you can see that, like I was saying, basically everything is down, including new listings and active listings. I mean, there's not much stuff to buy. Now, the key metric I want to show you here, which, as I've always been saying, especially when we're looking at a month over month change, is the months of inventory. It's literally almost the same thing, same as last month. It hasn't moved, right? So that's why my take on these numbers are that they're the same. So no positive spin, no negative spin. It's the same, right? So while there may be some price movements downwards in the micro markets I can see over here because everything is red, it's not that significant of a move since it's seasonal. Now, the only thing I will point out that's a little bit weird to me is why are the 905 detached prices up such a significant amount, around 3%? So that one I don't know, right? But that one's just strange, right? Now, in summary, for price, it's been flat since July, like I was saying. Steady as she goes. So nothing to be concerned about. Now, if you found this content useful, it probably means someone else will as well. So make sure you smash that like button and subscribe to the Prime Pros channel. And while you're at it, just share this family friend of you while you're during the holidays talking about real estate. Because let's be real, that's going to come up in your holiday family chats. Now, make sure you subscribe so you'll know when I drop awesome content like this in the future as well. And as you can tell, very nerdy, lots of numbers. I can see those of you who are watching and not subscribed, so make sure you smash that subscribe button. Don't be one of those dudes, And if you are looking for some help on how to navigate the 2023 market, whether you're trying to buy, sell, or invest, you can book a call with me using a link on the screen right here. It's www.chatwithzen.com. Before we get started on the nerdier stuff, a side note is that I was making a lot of this like massive data for a month-over-month comparison for a lot of the micro markets. I'm going to discontinue that right now because it's not moving. It's been stable for the last 5 months. There's really nothing to talk about. Okay, so let's get into the nerdier stuff. So first chart over here, as usual, you got your active listings. You can basically see we're right where that orange line is. We're at the 20-year average. It's not good. It's not bad. It's average, right? It's like it's a little smidgen below, but you know what? Steady as she goes, right? Nothing to be concerned about here. Next chart. Sales, wow, this is the worst month of 2022, and we really have to go back to like the pandemic month, which is like April 2022, to find this little sales in the pandemic. Is not good. But when you look at it as a chart form, you can see that we're just like not quite the 20-year low, which is like a 14-year low, which is still progress from July's 20-year low, I guess, right? Again, you can spin it however you want, right? While we are below our average of like 6,200, it's not that bad, relatively speaking, when you adjust it for seasonality, but it is still low nonetheless, right? So, do with that as you will. And finally, new listings, same as the last 20 years on average. Really nothing to see here, as you can tell. This is essentially, when you combine all these three charts, the month's inventory is the same as last month. Not much movement, right? Same, steady as she goes. And here's what I should expect, or like personally me, in December. More average price drops and more sales hitting some kind of low. I don't think it's going to be active this month. Now, the average price change going from November to December on average is about like 2.5% month over month. So we should probably see something like that. And on a year-over-year basis, we should probably see a -10 to -8% decline, give or take. And the narrative going to New Year and spring is that it's not going to be good given we're about to lap the peak months of 2020 coming up in the next few months. The challenge, like I've been saying for the last like 2 months on kind of where the market is heading, is that it's really going to depend on the buyer sentiment, which is determined by the interest rate expectations, which they're announcing later today. And this is, whether it's the mortgage interest rates or even the overnight rate from the Bank of Canada. Nobody knows what the heck's going on, which is why nobody knows how much inventory is coming online in spring of 2023. But this is what I'm watching for. Later today, we'll probably see, I don't know, like another 25 basis points, maybe 50, who cares, right? But then in 2023, you have 2 announcement dates for rates before the spring market starts taking place, right? So you got your one that takes place in January 25th and March 8th. And depending on the announcement the Bank of Canada makes on those 2 dates, it's probably going to dictate the buyer sentiment, which will influence the inventory, and it should give us some clarity onto what the market is. But then again, everyone said that in fall, and everyone's just like, oh, let's just kick it down the can, right? So for now, it's stable, and nobody is doing anything unless you absolutely have to. Steady as she goes. Hopefully this helps you in terms of trying to navigate the real estate market, because we are coming up to 2023. And if you are looking for help on how to now make that move in 2023, you could book a call with me using a link that's on the screen. It's right here at www.chatwithzen.com. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.